ओ यार, स्ट्रीम चल रही है कि नहीं चल रही? ओके, इट्स फाइन. We have 14 minutes till the market opens. No longs. मैं यार बेहतरीन, तुम बताओ. So you remember yesterday what I told you ke no longs and where the price should get a reaction from. When I was leaving, I told you two things yesterday. So the first thing was that was the point which I left now. That was the power of three I was referring to. Remember that? Singzab. Plus, I told you KR where the price should get a reaction from. No longs and price should get a reaction from this point. I drew it beforehand, before I was leaving. So you see how it worked out. And I told you one thing other than this, that was the 404. Remember that I told you about a point on the cues. I gave you a reference point of 404.55. That was the reference point. It was not a buy, not a sell, it was a reference point. So that represents the backbone of the whole long-term trend, which started in December. So we are way, way below that point. That breaks, if it stays here for long term, that would break the whole long-term uptrend. In the meantime, I'm day trading. This can potentially become a swing trade down. That is the backbone of the whole trend. So this point is 403.92, slightly lower from where it was now. 404, 403. 404, 403.92. This is a reference point for the uptrend. .92, 403.92. When I'm referring to the uptrend, I'm referring to the time frame of 4 hours. So you can think in terms of 4 hours trend. So that is the whole backbone of the uptrend. We are way below that. So that's in a transitioning phase. Yesterday I was not buying it because it was in a transitioning phase. And I told you that is going to be the bottom if it wants to continue up. It didn't. So today I'm not allowed to go long. So here we are. No longs. Probably will move to this volume imbalance, monthly volume imbalance. Wait a minute. Remove all this garbage. PO3 indicator, is it the daily or the weekly? Brand, this is this depends on the market you're trading. So when you are trading the NASDAQ, specifically NASDAQ, every market has its own width, general width, which is I'm using the term width, which is also, you can understand it through the ATR. So basically I'm for the NASDAQ, it's weekly, monthly and daily. The daily would you would have to plot the daily separately. That would be the PO3 indicator that would represent the whole daily candle for the intraday, the close, the previous close and the high. And for that static prices, this you are using weekly closes and monthly closes. So this becomes the end dog. We have 6 minutes till the market opens. So that was the previous day's close. And this is where the price is going to open. So, Singh Saab, tell me from that point to this point, what it's going to be when the market opened? When the market opens from this point, previous day close, to where the price will open. That would be, I don't know if you're here or not, that would be the opening range gap on the regular trading hours. So this is the regular trading hours We closed here previous day. Yes, opening range. We closed here. We are opening, this is the pre-market. We are opening here. So the new candle, the new daily candle, two daily candles are overlapped. Or one is the regular trading hours, which is, this is the real secret, I'm telling you. The regular trading hours is the real market. I'm specifically talking about the NASDAQ. I have tested, I don't trade an S&P, or I have traded the Dow Jones. But very precisely speaking about the NASDAQ, two daily candles are overlapped, and this daily candle on the regular trading hours, this is the real market. It refers, the price refers back to the highs and lows of the real market, whether or not it has gone up or below in the London session. So we have 4 minutes till the market opens. There are three 12th December 15. December. This is the 12th December. Opening range gap gets referred back. Price refers back to the opening range gaps. This was where the market closed on 12th December, and this is where it opened. Now that it has become relevant, it wasn't filled completely. It's on a 15 minutes chart, but was not filled completely. We are gyrating slightly above this gap. So now that it has become relevant, I'm gonna drag it across. Why it is relevant? Because I'm not allowed to buy it. Even if the price gets strong and move up, I wouldn't buy it. So I'm a seller for now in the intraday. And if the price continues its path above this line, this is, we can say, on the regular trading hours, this is what I'm gonna say is and on the regular trading hours, the same thing, the same logic is being applied. In the regular trading hours, let's set this coordinates. We have 1 minute till the market opens. The market is open. It's the first minute. We have numbers at 8 o'clock. We have touched the 12 December opening range gap, and we also have a gap today. The previous day closed and new day open. This is the gap. The only criteria for it to come up would be to the consequent encroachment of the gap or to fill the gap, but I would not be really interested in buying it, because if it moves up, first it moves back into the no man's land and stays there, then it moves up. So in any case, I'm really looking for shorts in the intraday. Hi Mario, how are you? No longs. This is a monthly volume imbalance, a price, an area of interest. The first 2 minutes is about to close. Check this out. We have just plotted these charts and we just plotted it, haven't we? Oh yeah, that's it. This was it. 12 December. Plus it is a confluence. It's within the confluence of a monthly volume imbalance. See, so at the open, you have a gap. No longs. The first 5 minutes will close in 2 minutes. I'm not focused on comments, so please, I'll answer all of your questions. Just go back to the regular trading hours. This can get strong, but no longs. The first 5 minutes closed. No longs. It's okay, it can get strong. I can see that it's getting strong, but no longs. Ooh. The first 5 minutes closed. Seven, 37. Whoa. 26. Since I really don't trade prop firms, so I cannot suggest you anything. I, you know, halfway till the 15 minutes close. First 15 minutes close. Eighty-eight. $39. No longs. Keep in mind we have numbers till 8 o'clock. At 8 o'clock. 8, 8, 9, 10 o'clock. 10 o'clock numbers. 8 in Pakistan, so. For the second 5 minutes close, this is the new 5 minutes and the last 5 minutes of the first 15 minutes. So this was 9:40. This is the new 5 minutes open. One six. Yeah, say it's okay. This can get strong. Last 2 minutes of the first 5 minutes. The first 5 minutes closed. This is the 45. This is the new 5 minutes opening. First got a reaction from this point, then that point. Keep in mind, I've already told you this is day trading. We are in a transitioning phase. If the price stays below the backbone of the uptrend, which I've told you earlier, so that would be in a transitioning phase. If it gets stronger and moves above that line, the price would, but I would not be buying it for sure. The 403.92 on the regular trading hours, QQQs basically. If it moves above that point, then I'll be looking to buy that. So in the meantime, I'm not allowed to buy it. I'm only allowed to sell it from these price points. And watch how it gets. Watch how precise it gets. Ooh, 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 ooh. First this, first then that. Okay, so this is the new 15 minutes candle. Sing, you have to, hey, what I repeat, you have to pay attention to. Every 15 minutes has power of 3. This is the opening of the 15 minutes. It opened here. The first 15 minutes candle moved to the wrong direction, then probably coming to the right direction every 15 minutes. So if you think of the market as a fractal, you understand what a fractal is, right? The fractal starts from the very minuscule molecular level. So as a whole, in a large quantity, it becomes and take the shape of its own self, but in a large shape. For example, I'm drawing circles, circles, and circles, 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 circles. Each of these circles would accumulate and make a bigger circle. So it starts from a very small time frame, if you understand what I'm talking about. For the market to be fractal, it has to be from 1 second to 5 minutes to 15 minutes. So I'm taking the statistical approach, just taking the 1 minute, the 5 minute, the 15 minutes as a fractal initial. So I'll be looking at, okay, for the first 15 minutes close, and you'll see it moves to the wrong direction, then to the right direction, wrong, then to the right. And the same would apply on the daily, the weekly, the monthly. So if you understand this logic, recurring logic, every time it happens. So when you project it on the higher time frame, you just have to expand your time expectations according to the time frame. But the same thing is the same thing. There is no book. You're talking about any book written on power of 3 or any other subject related to the trading would be derived from these candles. Somebody has observed these candles and had written a book. So the tail doesn't wag the dog. It's the dog that wags the tail, you know. Again, 49. We have numbers in 10 minutes. The macro is about to start in 50 seconds. You know what a macro is? What a macro is on electronic trading hours. Listen, it's the last 10 minutes and the starting of the new hourly candle. I don't know if I need to tell you anything other than this. What is the time of the macro? 9:50 to 10:10. The last 10 minutes of it's so obvious. The last 10 minutes of the hourly close and the first 10 minutes of the hourly opening. It's 9:50. That would become the false breakout. I don't know. Because I have taken a narrative or a perspective of a seller. So that automatically becomes that. But will it happen? I don't know. That is where the risk lies now. You're taking, even if you're taking thick scalps, then each of these stops would be rated. So 51, we have numbers at 10 o'clock. $52. On the regular trading hours, we have a very smooth trend line to the upside. If taken a perspective of a seller, this would be the trend line. 930, 930, 930. This is what I'm referring to. $53. Again, no longs. Is 45. Singh, keep this in mind. This was the last 45 minutes open. It moved down. Swap, it's irrelevant to you, Singh. So, really doesn't really matter for you. Learn how to trade. This is where the last 15 minutes opened, went down, went back up, and this is where it's now. If it closes here, it's going to close in 5 minutes, so that would be the high of the 15 minutes, the low of the 15 minutes, somewhere around here. The open and the close would be here. This is the new 5 minutes open. 56. There we go. There we go. We have numbers till in 4 minutes. How much was it? First that, then that, then the last macro, and can become a assassin or a ninja. Three minutes till the 15 minutes closed, and as the 15 minutes will close, the news will release. Monthly volume imbalance. Hey, if you're please manage risk. Otherwise, even if knowing where the price is gonna go, it won't help you. If you're new to trading, you won't understand what I'm talking about, but it's never gonna help. First, you need to know whether you're a buyer or a seller. Then you have to buy or sell at the price point of the extreme perceived risk. So when it's obvious, it becomes obvious for everyone. Because even at that time, the whole time I was like, no longs, and it needs conviction for you to take a risk. We just tapped into the QQQs, this gap. Did we or did we not? This is wrongly placed, so okay, so this is the new daily candle will look like. Overlapped candle. I talk about overlapping candle. Two daily candles are overlapped. This is where it opened. You're gyrating around this. A minute till the numbers are out. I'm not saying it won't get strong. It can get strong, but I wouldn't be buying it because, first of all, I am a seller of this market. Okay. If I were to buy at the counter trend, not only I will lose money, plus I would miss a chance on a good entry. That's the worst thing than losing money. The numbers are out. And the 15 minutes closed. So that was where it closed. Yep. No longs. It's okay. It's okay. Can do that. This is a significant price point on a 1 minute. If the price stays above this point, then I'll be looking to buy it, but it needs to stay at least, for example, it needs to stay and give me a closing of at least an hour or 2 hours or 4 hours for me to be interested in longs again, but not now. Ooh, 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 ooh. Holy moly. Holy. Holy. First, two things that are a good confluence. First, we decide that either we are a buyer or a seller through our trend analysis. Then we will look for the area of interest which complements that buyer. So, if I am a seller, I am a seller. So, what is beneath me? Is there an NVOG, an NDOG, a volume imbalance, a monthly volume imbalance? Then I'll prioritize what is more likely to give me a reaction, a monthly volume imbalance or a weekly volume imbalance or an NDOG. So this is how it goes. We are still in macro, the new 15 minutes and the news. A perfect storm. Still no longs. Whoa. Ho, 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 ho. We can come back to the consequent encroachment of the opening range gap. CE of the opening range gap can closed. This is where it opened. You can see that I can see when it gets strong, when it's not strong, when it has the potential to get strong. But does that shake my bias? In any case, no. The new 5 minutes. This is the new 5 minutes. This is where it opened. We are still banging our head to that brick wall or what? This brick wall I'm talking about. Majority of the time, listen, you see, every candle has spikes to the both sides. When a candle moves so fast, then it leaves one side. It go ahead and backtest. It's a very rare phenomenon, but it always comes back. You see all of these candles. There must be more than 100 candles. 50 bars. Every candle has these both spikes. So this is a basic power. This was left. The next candle filled it. Any candle. This was left. This was get filled. So this is a power of 3 on a seconds chart. So this doesn't even delivered on a second. You have to have a strong ass conviction. At any point did you hear me say, "Okay, buy it, fucking buy it"? No, no. So trends work like this. The candles will more often than not confuse you. A trend is basically a slope, if you can understand. There we go. Like infinite time it touched this point, and like first this, then that, again that, even at the news, again at that. So this is what ICT would say time distortion. Something is holding a price. This was time distortion. And now we go. We will fill the gap completely on the 12th December regular trading hours. Don't jump in, eh? It's obvious now. This gap is the 12th December opening range gap. This is where it's coming from. This is where the price is now. We opened here. So I was saying we tapped into it, so that was wrongly placed at that time. So going back to the 1 minute, this is the point that we tap back in. Ooh, 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 ooh. Ooh, ooh, ooh. No. Yeah. Perfect. Perfect. The moment we will touch this volume imbalance, the gap would have been filled. And we are at the consequent encroachment of the gap. Only 0.75, 25 point gap is left unfilled. So the price is getting referred back to this point. The next 15 minutes is about to close in 2 minutes. We are about to fill the gap. How many points? Like just 70 points here, 28 points here. First, this was the first thing. 30, 28 points. The whole range. What was the whole range? It was majority of the time it was 50, 54 points range. If just by assuming the right side of the direction of the market beforehand, I was like, you can say 24 points, 18 points. We are waiting for the news, so that's why I'm cutting these straight shots. So 20 points. This was the news. That was the. Then I placed a 27 point stop plus 67. In a 54 points range, you can see how much possibility there is once you know how to trade. The last 30 seconds till the 15 minutes close. We are about to fill the gap. This is the gap I'm referring to. The new 15 minutes open. Watch our volume imbalance. This was the volume imbalance, right? Whoa, I don't know what you think, but this volume imbalances are some monthly specifically, are the real deals. Real. Plus, why this happened? Because this was the new 15 minutes. It opened here, move down, then move up. Then the next opened here, move down, then move up. The third candle of the 15 minutes. So these reactions we get are because of the algorithm. The market itself was moving down. The algorithm held it. The algorithm is what manipulates price. The algorithm is there for that reason, particular reason. We're about to fill the gap. Plus, check this out. Check this out. How it's getting recognized. In any case, now I am really not interested in longs. Even if it moves up, till when? Till, do you think we can achieve this? You move above this point? No. Can it? Will it? If that happens, that would be something I would be like, okay, uh, we are breaking all of these interested point of interest. I'm not buying it. I might try to sell it, but through one checkpoint, second checkpoint, then I'll look for, okay, if once it moves above this line, then I'll like, okay, no matter what anyone said, I would be buying it, but we are way below this point. This is the backbone of the uptrend. This is the backbone of the uptrend. You know what uptrend I'm talking about? So think in that terms. So you think in that terms. 1 hour. Know what uptrend I'm talking about? So you will understand ke this uptrend. No. January. No. This uptrend. This whole uptrend. Plus, this is an hourly time frame on a regular trading hours. So it's 2 months uptrend. So think in that time frame. Think in that time frame. When I'm talking about this, the real market, this is the backbone of the uptrend. We started this move when I called out this move to the that was the reason. Back to the 1 minute. And we have filled the gap slightly, little gap. Back to the electronic trading hours. This monthly volume imbalance comes from all of these monthly volume imbalance are on my chart. There is no weekly volume imbalance. If there is, that would be referred to as the NWalk. But every monthly close has a monthly volume imbalance. But this is where it closed on 1st December 2021. And this is where it opened on 3rd January 2022. We are working within this monthly volume imbalance. It's about 48 points. So if intraday we can a 50% of that line. So that would be the CE. After 2 years. So when you are thinking in terms of monthly candles, 2 years is literally nothing. But the price gets referred back to those points. How amazing is that? And we have filled the gap completely, and I think that's about it. One thing. Even when I'm not here, I would really, once we have filled the gap, we can bounce back up. We can gyrate around here. Those who sold here because it was obvious would get fucked. No, it's gonna do its shenanigans. So basically, at 8:30, as always, something interesting is going to happen, and that would be so. I don't know what, but I would be a seller. I would really be a seller if I get a good risk to reward. Now that we have filled the gap, we are moving back up. You cannot make this up. I think today was a perfect stream. Any comments? About to go. The last 5 minutes till the 15 minutes close till 8:30. Mario, you are still here or you gone? I don't trade prop firms because I wasn't trained like that. I've been trading for 8 years. I started with my own capital. Then I trade my money plus other people's money. I have traded prop firms. It's not that I'm completely neglecting that tool, but I don't know enough about them, so I cannot recommend. He was asking about the best prop firms. I know all about them, but not enough to. Oh, watch this. Not enough to recommend, you know. Whoa. Okay, so see this. The 25. See, I told you, okay, it's the people who sold here are gonna get. G brand, it's always like as what is it? It's a box of chocolates. You never know what you're gonna get. You always have some expectations according to what the market is going to provide you, but having rigid expectations would really it the more rigid think you think in terms of rigidity now in a things. I've always think I'll get 60 points. If I think I'll always get 60 points, uh, then what's gonna happen? My brain is gonna above 60 points. I'm gonna feel afraid. You see how perception works. I have marked certain criteria for myself to. Uh, Once that is done, my job is done. So that is not the ideal being the trader. I have come to the ideal position through through natural progression and pain. Through pain, and which causes a natural progression, which is like you trade intraday, you trade, and some of these trades, after a while, in hindsight, you'll see that these trades work more often than not. So if I would have left this trade open and I traded in intraday other trades without closing this trade, I would have made money. So for example, if I were to take a swing trade now, if I were to take a swing trade, I would be really interested in taking swing trades at the real market. But when the price is up, this is a reference point, what I'm referring to. When the price is up, I would be taking intradays. But it's at that point, which is at the premium on a higher time frame premium. It might be at a discounted area in a lower time frame. You see, this is a relatively discounted area on a lower time frame, but it's at a premium on a higher time frame. So I'll be taking these trades up, 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 up. When it starts to come back down and comes back down to a discounted area on a higher time frame, then I'll take. First, I used to do. Okay, when the price gets to this point, I would be like blindly buying it, but it's not the favorable. It's not a favorable thing to do. So I would be thinking, okay, if the price reverses back here, somewhere around here, one of these buys would be for at least 20 days or 30 days. So I traded somewhere around here to get it. In previous my streams, you can see you may think that I'm lying or anything, but by the way I'm trading, you can think, okay, it's 8:30. So so it's like this. You day trade until you swing trade, and until you position trade. And if I'm a buyer of this market overall, if I'm saying I'm a buyer of this market, but I'm selling it right now, for our understanding, you can think of there are three trends. There are three trends in the market, in a same market. There are three trends. First, the trend would be, I'm talking in statistical method for you to understand, because we are not getting precise here. So you would think in terms of the first trend would be on the daily, because weekly and daily would most probably overlap, and the weekly would complement the daily, because we are now trading the daily chart. So the first trend would be on the weekly chart. Okay. The next trend would be on the 4 hours chart, and that would, in the hourly, would complement hourly. 1 hourly would complement the 4 hours. Everything has its own complementary thing. So okay, so there is another thing which everybody gets fucked in, which is the ATR thing, or the algorithm, in a sense, the 1 minute. So that the 1 minute would, I'm not specifically talking about the 1 minute, because I would say this in terms of 15 minutes. You can say thinking, so there's a 15 minutes trend. There is on that the 15 minute would get complemented by the half of 15. Statistically speaking, I'm not getting specific, not talking about the market, taking a generally, you can a base for your market, which is a theory, a basis for your market theory. So conception of the market, for the basis of conception. So the 15 would get complemented by, you can say, 5 minutes. Okay. So the daily would weekly would get complicated, weekly plus daily a same trend, the 4 hours plus hourly a same trend. And if the 4 hours is getting contradicted by the 1 hour, so you see what I'm talking about. 1 minute, it's 8:30. Check this out. The new 15 minutes, this is the new 15 minutes open and 10:30. Okay, so I was talking about, so if the 4 hours is getting contradiction, is not getting complement by the hourly, is getting contradicted by the hourly, so we would think it's in a transitioning phase. What would I do? What would you do? So okay, it's so the 4 hours is in between the daily and the 15 minutes. So if the 4 hours is getting bullish, for example, 4 hours getting bullish, so obviously the 15 minutes would already be bullish, because the 15 minutes is lower than the 4 hours. And then the weekly. Are you understanding what I'm trying to convey or not? I can then explain you in another way if you don't understand it. Brand. So this is how trend works. So I don't know if you're still here or not, but this is how trend works. If something is getting contradiction with other things, so I would say, okay, this is a no man's land. No man's land, let the price settle itself. Then we will be a buyer or a seller. Okay, so it's a good thing. It's a good thing, you understand. So obviously, so you can think of this, okay, I'm gonna make a drawing. I hope you get it. So think of this as a boundary. Just keep an eye on this 30 minutes, the new 15 minutes, okay? I'm gonna move it ahead. Okay, so this is a triangle. This is a triangle, and that would be the weekly. For example, if you consider this a weekly, okay, so we would think the market would make small triangle, but there's a boundary. You see this boundary? This is a weekly, and this is a 1 minute. So it's gonna make these triangles. This is a fractal. You can think of this fractal. The moment it touches a certain weekly point, because that was the boundary, or the monthly point, you can say, the monthly close. I'm not precise here. I'm just building a framework of reference from which someone can have a good basis for understanding. So that was the weekly, and that was the boundary. So once it touches this point, it moves back. Then starts. So where it wants to go on the weekly. So the weekly would be a boundary. So this a fractal would be a smaller triangle. So these smaller triangles would make a bigger triangle. So that's how fractal works. So within this fractal, there's a boundary to where the price wants to gravitate. So this is okay. So that what I'm referring to, the trend is this point. This is the real market. You see all of these spikes. All of these spikes are the fractals on a 1 minute is the ATR. You can think of that as price delivery algorithm and Fakri algorithm. Okay, so Fakri ATR is like every 15 minutes. The moment 15 minutes, man, every second. Because it cannot formulate itself on a higher time frame if it is not on a milliseconds time frame. A fractal works like this, na? Matlab ke if the what did I say? Okay, so if even on a second chart, the price would have both sided delivery. So once the price starts from for example, the price starts from a second chart. It moves back up to the weekly chart. Weekly to where it wanted to go or where it has been already in the past. So it refers back to that point while fucking everybody up. So this was the fakri and that was the slope. The slope is the real market. So people think a power of 3 above a certain time frame, there is no fakri, to be honest. If there is a high volatile thing coming up in the world, or if there is a pandemic coming up, so the overall market would, the range would really expand. So the fakri would expand first, then it moves to the real direction because everyone would be out. So I hope you understand some of it. But the real core, the core was like it was predetermined in the sense that it wanted to move up. So it won't move up straight up, right? It would buy here, somebody would take profit here, so it moves back down. Somebody would be selling here, so it moves back up to take their stops. So it all goes back up and down, up and down. I really understand it very extremely good intuitively. I haven't explained it to anybody. I'm just so I was just trying to get a feedback. Okay, so just by imagining this, for example, you can think of a fractal, how the fractal would work, how the real market would work, and what is the ATR. This would be the ATR. So if you are a day trader or a swing, some people would say I'm a day trader, some people would say I'm a swing trader. People will say, okay, the swing trading is easy. No. If you, to be honest, if you really understand the market and lot sizing, you can really make shit ton of money through swing trading, so through position trading. Why do people think swing trading is easy? Because there is not much perceived risk, but there is the ATR. The ATR works in every time frame, on a 4 hours, on a daily time frame. So we would think in terms of dailies, the weekly, the monthly, but the market really doesn't think in terms of it's really connected. All of the market is connected like a snake, a coiled up snake. Okay, so it's 10:40. I think I should go. Okay, thank you guys.